We're looking at stocks trying to ramp up here, getting a lot of participation across the board. Tech turning positive. Joining us in studio, Don Nesbitt, Senior Portfolio Manager at FM Investments. Don, welcome back to the show.
Thanks, Oliver.
Hey, I was just realized that your guys' name, firstly, FM Investments, is a force equals mass times acceleration. A little physics in there, right?
Exactly. Yeah, very good. Yeah.
So what the physics of this market, let's talk about, because we got a ton of momentum in tech. This morning we tried to do this like small cap rally, and then we just fall back on tech, it seems like, generally right now.
And that's a good point. I mean, we were talking earlier about how AI, how tech has been a real grower in this economy. And, you know, over my long career, I've been at it for 40 years. You know, when you talk about these tech stocks 20 years ago, they were the growers, they were the high P. Now they're the market.
Yeah.
You know, when you look at the top five names in the S&P, it's over 25% of the market cap. So, you know, these stocks that used to have betas in a 1.5, 2, 3 times area are now the market.
Yeah, so it's one.
Yeah, exactly.
You know, it is the index. You know, I think a lot of people that kind of scares them, but at the same time, especially when you deal with AI, which is something that can be very sort of consumptive of other productivities. Like, that's kind of the idea, right? It's supposed to make things more efficient. It's supposed to disrupt. Does it make sense to some degree? Like, over time, should the market get more concentrated? Well,
that's a big question, right? We're dumping all this money into AI, and right now it's a learning stage. It's a data gathering. It's these chips makers, you know, NVIDIA, Broadcom, and so forth.
Yeah.
What remains to be seen is how this translates into useful tools, into useful apps, in the software areas, other areas, and even now broader into the other areas of the economy.
Kind of seems like that's where Apple comes in, or where that rally over the last month has been like pure valuation based, right? There's no earnings there yet related to this. That's just a product and an expectation that they're going to be able to execute.
Yeah. Where the chip makers are selling the chips. So
exactly.
They're realizing the growth right now.
Yeah, it's a very different thing.
As you said, the next step is going to be very important. How are we going to translate this into the higher productivity that everybody's talking about, into the greater earnings?
We're going to talk about a kind of specific theme here in a sec, but before we get there, just kind of one other macro thought, because we've got an inflation print today that seemingly will continue to kind of pave the road for the Fed, but look, we still don't have any promises in the short term. It's basically September they might cut. So we've got higher for longer for a few more months at least, but it seems like the market hasn't had a big problem with that yet.
Yeah, and what's interesting, what's always been on my mind is where's the terminal rate going to be once they start cutting? Where will it end? And my guess is it's going to be a lot higher than it was before they started in this, you know, post-pandemic with the rate. We're not going back to zero. And then that has ramifications for how you value, you know, equities, and other assets.
Is there a potential then for some of this stuff that's been underperforming to just kind of stay stuck? Like, we were at this Morningstar conference last 2 days. We were talking a lot of like thematic investing and factor investing, and there's still this kind of like cohort of like the value group, and kind of like the small cap value, where people are looking and they go, man, these valuation spreads are enormous. Whenever it comes back, it's going to be this great fulcrum, but maybe it doesn't have to come back.
Well, everything translates into earnings, and how's it going to affect those earnings? So, yes, you have these growths, which, you know, the problem there is a lot of these things are priced for perfection. Can they continue that growth path? Value doesn't need to prove itself as much, right? So all we have to do is have kind of normal growth, back to normal. And with their lower valuations, yes, we would expect them to outperform.
Okay, so we got to get that growth back. Some of these companies that have gotten huge have now been splitting their stocks. How does that affect this? Because we kind of got into this frothy environment post-COVID where splitting a stock to make it more available as a trading vehicle was seen as a price-positive thing on its own. Is that circular? Is that problematic? Or is there some truth to that?
Well, you know, from a fundamental perspective, nothing changes in terms of the market cap. It's just that the equation between price and shares changes. You know, price drops, shares increase. So from fundamental, there's no change. I can't really quantify that change. But from a behavioral aspect, yes, I think you do see some activity around that might spur. It brings focus to the fact that these stocks have been big growers. Also, when you look at like a retail investor, you know, Chipotle stock was it was over $3,000 before the split. You know, you have a $10,000 portfolio. One share is going to eat up, you know, a 30-year portfolio. Now a smaller investor can afford to diversify into that with you know, a $65 price.
Makes it more accessible.
Yes, exactly. So you have that. Also, you know, if you're I'm a derivatives guy too. So if you like to trade options, they're in round lots of 100.
Yes.
So again, it makes the option trading much more palatable for many investors.
Do you think it's almost a requirement by companies to make their share price more acceptable to an options market when so many are trading options now that didn't before?
You know, I don't know in the past that they've thought about it that much. And the interesting thing is because, you know, we ran a tech fund for years that was price weighted, and the splits was a way of basically bringing back the overweights to a more reasonable. Taking chips off the table, if you will.
Right.
But there haven't been a lot of splits in the past decade or two, and now you're starting to see that pick up. But you know, these stocks have hit, you know, astronomical levels in terms of their pricing. You know, 20 years ago, you never heard of $1,000 stock.
Right. Chipotle is in one of your guys' strategies, large cap core. Tell me how it fits in sort of fundamentally and what that approach takes.
Yeah, it's been a tough call in the consumer discretionary, but Chipotle has been a great play there. It continues to knock the ball out of the park, and a lot of other companies in the restaurant industry in particular have been having troubles. We've heard about McDonald's, we've heard about Starbucks. Yet somehow Chipotle continues to do well.
Yeah, they it seems like they almost have a price point that's perfect, right? Where you can get a pretty filling dinner for under $20, and in inflation, you know, I guess it depends if you get guacamole or what else. But to me, that's also part of it, is that they're almost kind of threading this needle of the economy at this juncture.
Yeah. And that hits on a good point about the consumer and what's going on there. And we're seeing a lot of pressure in the lower up to low middle income consumers. And you know, the low income consumer is not a huge portion. It's probably around 15% of the total consumer base. But it's still an important canary in a coal mine, if you will.
Does that mean that the options are limited within that sector? How much does the consumer contribute to the strategy on the long side?
Well, again, we're benchmark aware. So I think in our large cap portfolio, we're carrying about a 1.4% weight to Chipotle. Okay. So not a huge factor. We're well diversified, but we have to have representation across all 11 sectors.
Any of these big tech that are splitting become more appealing?
Yeah, that's been kind of the focus of a lot of discussions over the past months. And the split, again, from our perspective, is irrelevant. It doesn't change the valuation, doesn't change the fundamentals. Again, kind of if you're trading options or for the retail, it might make a difference. But from our perspective, it's still getting back to the things we talked about earlier. How can this growth continue? Growth stocks do great, and if you follow their momentum, it works until it doesn't work. So, right. For example, on these two stocks, NVIDIA and Broadcom, we've seen them go parabolic year to date, right? Well, if I remember my geometry right, you know, parabolic has a downside too. Right. So you can start to see some of that, and I think we've seen a little bit of testing the limits, if you will, here in the last week with the pullback of these stocks.
Absolutely. Don, good to catch up.
Yep.
Thanks for your time.
Thanks, Oliver.
Appreciate that. Don Nesbitt, Senior Portfolio Manager at FM Investment.